CPI. Come on in.
We are Concrete Lion Pictures.
And you're watching Taking Stock.
Two minutes to go here to the close. Let's rock and roll on this Wednesday, March 11th. Oil prices moving higher as stocks moving lower once again. Energy and tech at this hour, the only sectors in the S&P 500 in positive territory. Laggards at the bottom of the 11 sectors include staples, real estate, as well as utilities. That sets up a jam-packed edition of Taking Stock. And welcome to the show, one and all. That's the broadcast you're watching. I'm your host, JD Durkin. Mere moments away from the ringing of the iconic closing bell down here on the trading floor of the New York Stock Exchange. The great Peter Tuchman of Trade Moss, the one and only Einstein of Wall Street, is on deck. He'll join us right after the bell for his take and perspective on today's price action here on Wall Street. Volatility holding on relatively stable despite ongoing uncertainty and geopolitical strife out of Iran and the Middle East. Yields up across the board. The dollar somewhat elevated, but not a really dramatic move to the upside. Gold and silver both taking a bit of a breather here on this Wednesday afternoon. WTI and Brent, West Texas and Brent respectively, of course. Those continue to be the big stories. West Texas into the close, currently trading at about $88 a barrel. Brent a bit more pricey at $92.54. The team from Costamere Bulkers, ticker symbol CMDB. Here at the big board, they are set to do the honors with the Magnificent Seven tech stocks in mixed territory. We'll pick up the rest of the Taking Stock broadcast after the bell. Time now for the close. How is that sounding block never broken? People really hit it with authority sometimes. All right, your final tale of the tape on this Wednesday, March 11th. The S&P 500 down 0.08%, essentially unchanged for the day. The Dow down 0.6. The New York Stock Exchange Composite Index down 0.25%, and the small caps down 0.2% as well. Catching a bid on the day, not a big surprise. Oil and energy stocks led there by EOG Resources. The semiconductors actually having, all things considered, a pretty strong session here on the street. Shares there led by Intel. Advanced to declines tell us on the day, for every one stock up, almost two stocks down. Pretty clear negative breadth with sellers pretty firmly, though not overwhelmingly so, in control of the tape. Let's bring in the Einstein of Wall Street, Peter Tuchman, the institution inside the great institution of the New York Stock Exchange.
Yes.
Thank you for being here.
Sure.
Muted reaction as to be expected given recent volatility. What did you see across the tape today,
You know what
Peter?
today felt like? Look, we came in and the market was virtually flat. And so I think today was really a function of oil being back up again and basically that putting that inverse relationship and that putting pressure on the market. I think yesterday, if you looked at the way yesterday traded, there was something, and we saw it again today too. There was so much, there was news out that, you know, at one point which sold the market off aggressively about news about drones. You know, Iran was going to attack, you know, California with drones. So there's so much erroneous news going on. Yesterday, I think it really, the market feels like it's suffering from a little bit of PTSD from yesterday's fake news. It was so much fake news that even the White House didn't know what they were putting out. They were pulling things back and going back. It was like if you've ever been in a car with somebody like your old uncle who's driving with one foot on the brake and one on the gas. Like, oh man, that's what it felt like. It was such a nutty day. And I feel like people are just sort of stepping away from it. Until I know what's going on, you know, that unknown, that anxiety is not serving anybody. So people aren't really selling, but they're not really buying either. You know, we've had even the days where the market was down, we've seen the advanced declines be okay. So some of the days have been constructive. You know, those are important days. Even when you're seeing a lot of red on the screen, days can be constructive, trying to position people for what the next move is. This just felt like people were just like still in shock and not really, you know, they wanted to sit on the sidelines and not do anything.
Yeah, given your 4 decades of experience down here on the trading floor of the New York Stock Exchange, what is one tried and true lesson that you remind yourself during times of uncertainty and times of volatility?
you know what? Don't get emotional about money. It goes back to that great line from the original Wall Street movie that was filmed out here with Michael Douglas and Charlie Sheen, when he says, "Gordon, never get emotional about money." You can't get wrapped up in this. You know, it's if you get wrapped up in all of the insanity and the way the dissemination of news, the way it's been approached under this new administration. No disrespect to the new guy in town, you're going to make decisions that are not the right ones. We've seen that. Every pullback has been a better buying opportunity than a selling one, and being everyday reactive to this market tends to be not constructive. You know, and you're basically chasing your tail, and that doesn't seem like a smart thing to do for either an investor or a trader.
Yeah, as a trader, how do you approach the mixed messaging out of the White House? We had the president say one thing to Weijia Jiang at CBS News 2 days ago, and we had that huge rocket up in equities in the 3 o'clock hour. And then he had a press conference where he said something different a couple hours later. What do you do with that?
Technicals. At the end of the day, that's the bottom line. You know, if you use moving averages, go to Wall Street Global Trading Academy, check it out. Technical analysis is the only way to trade this market, right? Bottom line, establishing support and resistance in this market on a moment to minute, 5-minute chart. Look at your charts and look for support and resistance. That is the only way. And always use stop orders. You've got to look, as a trader, you're hitting singles and doubles. If you're sitting around waiting for a home run, you're going to end up being disappointed. But if you're hitting in single doubles, the volatility is your friend. And so if you've got, you know, look, there are 50 million plus new retail traders in this market who are doing really well if they follow the rules of discipline and consistency, right? That's the bottom line. This is a great trader's market, but you've got to go back to your fundamentals, not your fundamental analysis, but the fundamental about discipline, consistency, stop orders, protecting your downside risk. So from a trader's point, we're hitting in singles and doubles. Single and double hitters are the ones that got longevity.
Yeah, that's spoken like a tried and true veteran of the game right there. That is excellent advice regardless of the market conditions, especially for a time when there's so much chop and volatility like we have today.
Absolutely.
The great Peter Tuchman, senior floor trader at Trade Moss. Thanks for picking us off, my man. Nice to have you. Skylar, take your mic. Todd, you and I will head this way. We'll bring you the latest analyst calls for the day. Excuse me, one and all. Barclays upgrading Nike to overweight from equal weight. They are citing a ton of positive catalysts on the stock, like management and recent operational progress. Excuse me, one and all. Shares of Nike down on the day and down 12% since the start of 2026. Next up, Wells Fargo initiating Planet Fitness as overweight. Somewhat ironic, saying it's hard not to like the stock. They cite impressive growth story and a new management team. Shares of Planet Fitness down 30% so far year to date. Finally, how about Netflix? Evercore ISI analysts reiterating Netflix has outperformed. They call it high-quality asset in a global streaming and unmatched scale. Shares of NFLX up 2% so far here in 2026. We'll take a look at a couple NYSE notables before we toss the break. How about Oracle? This is the big story of the day, crushing the cover off the ball. Not so much from the start of 2026, but up 9% on the day after a very impressive quarterly results announced yesterday after the close. JP Morgan upgrading the stock to overweight from neutral. We had a big gap up, still down 17% on the year, but up 10% already. Almost 10% on the day, but up about 12% over the last month or so. And how about Chevron? Energy, of course, continues to be the big winner as we watch the conflict in Iran and the Middle East play itself out, up almost 3%. Energy stocks on the move, outperforming the market by a long shot. Shares of CVX up 24% already here in 2026. Ashley Mastronardi with the New York Stock Exchange sat down with Preply CEO Kirill Bagay to discuss all of the ways that his firm's $150 million raise is helping to advance AI-powered language learning. Take a look.
Preply is an AI-powered online learning platform, and it just reached unicorn status, valued at $1.2 billion. That's after a Series D funding round of $150 million, led by the VC firm Westcap. Joining me now to share more is Preply's CEO and co-founder, Kirill Bagay. All right, so before we dive into the funding news, what is Preply?
So Preply is the most efficient and most human way to learn a language. We have built a phenomenal platform. Since inception, we have already delivered 100 million live personalized one-on-one classes with our tutors. So we basically establish a marketplace where we connect learners and tutors. We aim to connect learners with the world's best tutors. Today, we have 100,000 active tutors on Preply, and we are very global. We are present in more than 180 countries. Our long-term goal is to really build that legendary brand that will define how humans learn in the future.
Why did you start Preply?
So it really starts from my own experience. When I was in university, I really understood that at some point I would like to be a global entrepreneur and build a global business. And for that, I had to significantly improve my English skills. So I've tried all different methods. And at some point, I tried a tutor who was doing online classes. And together with my co-founder, Dmitro, we saw a phenomenal opportunity to create a marketplace where you can find those tutors from many different countries. And in this way, we really wanted to increase access to personalized learning. Today, on Preply, 90% of classes are happening between learners and tutors who are physically in different countries. So you can see it's a very global marketplace, and today we are available in more than 180 countries.
And how do you plan to allocate the capital from this funding round?
Yeah, we will continue to do what we do better than others, invest in our product and AI capabilities. We really want to improve our platform end to end, make it more personalized, more human, and more efficient. We are still scratching the surface of the market. The market is massive. It's more than 2 billion people in the world who want to improve language skills. A lot of them are our audience, serious learners, and we have to start scaling our brand. So we'll start doing this in Europe and the United States, and then hopefully we'll scale to other regions as well.
Who is the Preply user?
So as I mentioned, we like to call them serious learner. So those are the customers who see language skill to be a very important investment for them, not just a hobby. They usually want to improve language to be able to connect with their colleagues, partners, relatives abroad. They want to progress in their careers. For many of them, language is paramount to get to the next stage. And they also want to belong at their workplaces, in their communities when they relocate, or when they're traveling. So yeah, all in all, those are the customers that we focus on, and we really want to build the best experience for them.
And how is Preply leveraging AI?
Yeah, we love investing in AI. This is one thing that we are very passionate about, and we already have a very, very strong setup. So we apply AI across all the journey. We start with the most important part, matching you with the right tutor. We use AI to find that one tutor for you that will change your trajectory. And through data, we've seen that selecting the right tutor is the biggest driver of success. And then when class is starting, we actually have them in our video classroom. And with AI, we analyze classes, track progress, and generate exercises to practice between the lessons. On the tutor side, we also have a lot of administrative tasks that we are automating for them, so they can focus on what they do the best, teaching the world.
And what is next for Preply?
Well, we have our vision to help hundreds of millions of learners to connect, belong, and progress in their lives. And we see that the market for this is quite large. There are more than 2 billion people in the world who want to improve language skills. So we will keep our heads down. We will keep investing in product and really building this personalized human experience. And as I mentioned, we will start scaling our brand. We do really want to build that one legendary learning brand that will define how humans learn in the future.
Kirill Bigai, CEO and co-founder of Preply, thank you so much for joining us at the New York Stock Exchange.
Thank you for having me.
Welcome back to the show. You're watching Taking Stock on this Wednesday afternoon from the New York Stock Exchange. Longtime friend of the show, Joseph Shalom, joins us once again. He is the CEO of SharpLink. Nice to have you back. Nice to see you again.
Great to be here, JD.
Can I get your take on general crypto price action? We talked about at the top of the show, Bitcoin still holding on more or less to that 70,000 level, but you know as well as anyone, we are well off of those highs from October. Seems like that's been quite some time.
Both Bitcoin and ETH have had tremendous run-ups in the last several years. We've seen since October a pull down of about 50%. Started on October 10th when there was a pretty significant deleveraging event. There was bubbles in the industry, and this idea that you can invest in perpetual futures allowed people to lever up. It's very, very natural when you have a deleveraging event. It takes about a quarter or two for the liquidity to come back into the system. But it feels like we're approaching a bottom, and the long-term thesis is really, really positive.
Talk to me about some of the ways, or what are you seeing for ETH over other high-speed rails right now? We talk so much about the crypto majors, but ETH tends to be a little bit of its own ball game. What are you following there as the broader cryptocurrency-related conversation continues?
We are looking at three macro trends. One is the adoption of stablecoins, so the idea of a digital dollar or another currency. It's about 310 billion in circulation today. There's an expectation it could grow into the trillions, based on the second trend, which is just tokenization of assets, stocks, bonds, funds, and commodities. And you're hearing the largest financial institutions in the world tell you loud and clear, they are going to tokenize all their assets. And the third thing is this idea of a lot of finance that's centralized will end up sitting on decentralized rails. And what does it mean for Ethereum? Ethereum has about a 60% market share across stablecoins, tokenized assets, and DeFi, and that's very, very bullish for the future of finance. It'll end up becoming the decentralized settlement layer for the new rails of finance.
Speaking of DeFi, $200 million deployment into DeFi for SharpLink. Talk to me about those initiatives and some of your other top priorities these days.
Sure, so unlike Bitcoin, Ethereum is a natively productive asset. You can stake your Ether tokens, get a yield, it's called staking yield for your investors. And what's very interesting is most of that is done through custodians in a very vanilla manner. But when you own billions of dollars of permanent capital, we're not a fund, we're not an ETF, you can actually make deployments on a multi-year basis and get incentives. So going out into the decentralized finance world allows us to get outsized returns, but we're doing something interesting that had never been done in history. We're keeping these DeFi returns and protocols within our qualified custodian, which is Anchorage Digital. Had never been done before.
How close are we to a regulatory environment that allows banks to hold ETH directly? And in what ways have you seen the broader industry-led conversations change, even over just the last couple quarters?
So I'll tell you from two dimensions. One is the US Genius Act that passed last year set the stage that stablecoins could be used broadly. Today, we're essentially waiting for the US Clarity Act to make its way through Congress. There's a bit of a debate between the crypto natives and the banks. The banks are very fearful of stablecoins offering yield. I'm optimistic it'll happen before the midterms, but if it doesn't, both the SEC and CFTC are ready to solve the problem through rulemaking. The second dimension is global. This has been a US-dominated industry. You're starting to see countries realize in Hong Kong, in Korea, in Japan, in Singapore, their native economies need to digitize, and they're looking to pass legislation to give regulatory clarity. When that happens, you'll see banks hold stable coins and crypto on balance sheet, and it'll become like any other tokenized version of an asset.
Joseph, my friend, the worst part about this interview with you is that I have to leave it there. And I'm out of time to continue it, unfortunately. Please come back anytime. It's always nice to have you.
My pleasure. I look forward to being back when the price action is happening on the positive side.
Yeah, I think we'll push back north above 70 for BTC pretty soon, I'm sure. Joseph Shalom, thanks for being here. Nice to have you.
Thank you, JD.
More Taking Stock coming up after this. Welcome back to the show. Time for the latest headlines in the worlds of startups, raises, and rounds that you need for your Wednesday afternoon here on Wall Street. First up, NVIDIA agreeing to supply up to 1 gigawatt of next-gen AI chips and make a significant investment into Thinking Machines Labs, the startup founded by former OpenAI CTO Mira Murati. Next up at this hour, Bill Ackman's Pershing Square looking to raise as much as $10 billion in a New York Stock Exchange-listed IPO that would combine a closed-end fund with shares in his hedge fund management company. And finally, startup talent investor entrepreneurs raising $200 million in new capital from tech leaders. That includes people like Reid Hoffman, Eric Schmidt, the Collision brothers, and more to fund and build companies from founders before they even have a team or even have an idea. And Alice Bent-Inc joins us now via Zoom. Alice is the co-founder and CEO of Entrepreneurs First. Alice, it's really nice to have you joining Taking Stock today. Thanks for taking the time. Why is this specific group of investors betting on individuals over ideas right now?
Well, we're delighted to be backed now by some of the world's most influential both founders and investors. And the reason why they're interested in backing the next generation of talent, i.e. individuals, before they necessarily have a company, is that one of our strong beliefs is that the next generation of outstanding companies will come from whatever that wave of entrepreneurs is most interested in. We don't have a thesis on a particular technology. Our thesis is on the individual, on the talent. If you think about tracking trends, we believe the people who know the trends best are those 22-year-old technologists that are building in their bedrooms, obsessively diving through different parts of the internet. Those are the ones that we want to back, and that's what our investors are excited to be part of.
Alice, please correct me if I have this wrong. Are you requiring all EF founders to relocate physically to the Bay Area? And what do you see as really being the draw for that particular part of California?
So we run our program across Europe, India, and also the US. But we do believe there is something particularly special about the Bay Area. You know, this is the most fertile ground in the entire world for building early stage startups. So we do now relocate all of our companies to the Bay Area, and we see this transforms a couple of things. Firstly, it transforms their speed and velocity. They're able to get to customers faster, they're able to get to investors faster, and secondly, we do find it transforms their ambition. This is one of the most exciting and competitive locations in the world to build a company, but that competition actually makes the founders better. It pushes them to be at the very top of their game. So since we've started moving our companies here, we've seen average valuations for our startups more than double, and the speed to raise be cut to a matter of days rather than a number of weeks.
Talk to me about the recruitment process, leveraging college campuses, not just here in the United States, but really all around the world.
So we really see ourselves as akin to CAA, you know, the big talent agency for Hollywood stars. I have a team of investors that go out to the world's best college campuses, into different communities, and their job is to identify individuals who haven't even yet founded a company, but who we believe have the behaviors and the mindsets to be one of the world's most impactful and exceptional founders. So they're going out talent spotting, and this really is a craft rather than a science. You know, understanding the sort of behaviors we're looking for, some of which are obvious, which are, you know, bias to action, speed, intelligence, but some of which are really hard to identify. Hidden megalomania, high personal exceptionalism, a strong belief that the world is conspiring in their favor, and that's what my team is spending the majority of their time doing across 3 continents.
Alice, I apologize, didn't mean to cut off your previous answer. What does it look like to compete with other top tech firms for talent?
So competing with other top tech firms, the thing I would say is that the status quo is still really strong. You know, when you're in the Bay Area, it feels like everyone is still, you know, everyone is trying to found a startup. But you don't have to go very far out of, you know, this small part of the world to realize that the status quo of staying in academia or staying in an existing job is still very strong. So yes, we do compete with other employers, but it's very rare we compete with other investors. Pretty much all of the other world's venture capitalists are investing in teams and companies that have an idea, whereas we're going that one stage earlier and just investing in the individual.
Alice Benting, co-founder, CEO of Entrepreneurs First. Thanks a lot for being on the show. Great to have you. Folks, don't go anywhere. A lot more Taking Stock coming up after this.
Welcome back. I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money. Think your favorite SaaS company suddenly became a bank? That's probably Unit. Unit is the platform that turns any software company into a fintech, without the part where you suddenly need a legal team the size of a small nation, and you know what I mean when I say that. Banking as a service isn't a card here and an account there. It's a compliance-first operating layer. Unit provides accounts, cards, payments, lending, and compliance rails through sponsor banks, abstracting the regulatory heavy lift and letting companies focus on their actual product, not on deciphering what enhanced due diligence even means on a Tuesday morning. So how does Unit actually make money? First, platform fees, subscriptions for access to accounts, ledgering, compliance, tooling, dashboards, and workflows. Second, usage-based transaction fees, fees across ACH, wires, instant payments, card transactions, and deposits. Third, interchange economics, shared revenue from card spend. Fourth, lending, partner economics when customers embed credit. And fifth, compliance add-ons, KYC, KYB checks, risk automation, and ongoing monitoring. Let's do a momentum check here for a second. Unit has become the go-to BaaS platform for software companies that need to embed financial products without inheriting a regulatory migraine. Growth has come from vertical SaaS, marketplaces, and logistic platforms that discovered almost overnight that adding accounts, cards, and payments turns nice-to-have workflows into full revenue lines. So what's their moat? Compliance, plain and simple. Unit's advantage is the stuff that is not as sexy as you would think. KYC, KYB, audit trails, ledgering, and controls that regulators actually like. It's the kind of infrastructure that once it's wired into your product, nobody dares rip it out. It's not sexy, but neither is a failed audit. Unit makes sure you never have one. Unit monetizes embedded finance the way cloud platforms monetize computing. Build once, scale everywhere, and charge as customers grow. That's how Unit actually makes money. Have a company you want us to feature, you want to break down how they make that cash? Drop them in the comments and maybe we'll feature them. In the meantime, back over to you.
Hello and goodbye. We'll see you tomorrow here on Taking Stock.